Hi, and you're watching The Money Show, and it's time to answer your portfolio queries. And just in case you're watching the show now, tuned in, all you have to do is just send across your questions on our WhatsApp number that's flashing on the screen, and also the email ID where you can reach out and ask our experts anything about your financial portfolio. And today, to do your life financial planning, I'm joined by Anil Rego. Anil, hi, and welcome to the show. Let's begin quickly. We have Neeraj Yadav's question first, and he's given his portfolio details, doing an SIP of almost 5,000 rupees. The funds in his portfolio are SBI Gold, Direct Plan, Motilal Oswal Large and Mid Cap, Nippon India Large Cap, ICICI Pru Large Cap, Parag Parikh Flexi Cap. Total SIP, okay, it's 5,000 each. Total SIP is 25,000 per month. Current value of his portfolio, he says, is 26 lakhs, and he's 60 years old, and he wants to know which fund to stop investing in, from where can he redeem the money, and he also wants to invest 50 lakhs one time. So that's the question. All right, so I don't know, it's very concerning because he says he's 60 years old. So I'm not very sure that this portfolio is something as a retirement backup that he wants to treat, or he's looking at a long-term wealth or maybe a pass it on wealth. Considering both the scenarios, what should be the strategy according to you, Anil?
Yeah, I think that was my first question actually, that,
Right.
considering one's age,
Yeah.
uh, are you actually ending up requiring this money for your basic needs and needs, including if you require a monthly income, etc., then you need to manage liquidity, and also you need to have the portfolio in a much more balanced manner, right? So now coming back to what are the things that he can stop and what is he can restart as well. Okay, I think in his schemes are reasonably balanced, even though the allocation is predominantly on the equity side. And I think one thing that he can do a little differently from the SIP is, I'm suggesting that he stops the Nippon India large cap fund and moves it over to, say, HDFC Balanced Advantage Fund. Okay, so this will sort of also give opportunity for liquidity, and you can find at times like these, when markets are volatile, sometimes the balanced advantage funds do even better than an equity fund itself. So that will not compromise too much on returns either, because when you see downside, this fund does better, and it helps catch up in such periods of time, right? Now, coming back to his question of the 50 lakh that he has, here I would think that, because one doesn't have sufficient information saying that does he need this money, does he want to go aggressive, etc. If he wants to go aggressive, I think some of the broadly the existing funds is what he can top up into a little bit more. Okay, but I think from a recommendation, I would suggest looking at maybe a Parag Parikh Flexi Cap fund is one of the funds, maybe 15 lakhs of it. Then HDFC Balanced Advantage Fund can be the second one, which is a dynamic asset allocation fund. Okay, and he can do anywhere between 15 to 20 lakhs. And similarly, DSP, Regular Savings Fund, which is a more conservative sort of hybrid, and up to say 25% of equity it will have. So that is, and even greater step down. So there also, depending if he's put 20 lakhs, then he can put 15 or 20 lakhs, vice versa, depending on the how aggressive he wants his portfolio to be.
All right, so these are the changes, and also we don't have any clarity on the risk appetite. So maybe there's something more that you want to know. You can send across the question again. Let's take Ramesh's question, Anil. And okay, he's got 12 funds in his portfolio, investing almost 16,000 per month. And I will not read out the name of these funds because there are a lot of them. So that's all. He's just given us the funds detail, and nothing beyond that is asked. So I'm assuming he wants to get a checkup of his portfolio, and definitely he needs a lot of filtering. All right. So what to exit, or should I ask what to stay in?
Right. Yeah. So the first thing is, I think he has too many schemes. So and really small amount doesn't make sense. Excess diversification does not help in managing risk either, right? So it just increases your burden on tracking. So from that standpoint, I think it makes sense for him to sort of reduce the number of funds. He's chosen funds reasonably well. Okay, of course, he does have some bit of stuff around the thematic funds, which he can only if he has great conviction he can look at it. But one area that I think that he can look at is he has a whole lot of index funds, and almost every index, he's gone in a systematic manner. I think those one can consolidate, and possibly, if you ask me, he can keep the more large capish type of index funds in the portfolio, and the rest of them, he can possibly use more of the actively managed funds out there. And the second one is also, I'm saying, Motilal Oswal, multi-cap. My view is he can, go back and put it off into, say, a large cap fund, or even he can sort of just, do away with a fund like that. So this is my suggestion for him. But it's lesser from the standpoint of saying that the funds are not good, but more from a standpoint of saying that, okay, let us consolidate and have fewer funds and have them as complementary, so that you are able to have a diversified portfolio while not going excessive on a number of funds.
Exactly. So this is how you need to consolidate and filter out your portfolio. Having more funds doesn't mean that you will be making more return or make money. You will be just duplicating the investments done. So just be very mindful about it. Next question. This is Prabhat saying, 42 years old, Anil, and started doing SIP last year August, and wants to continue for 15 years. The target is almost 3 CR, and he wants you to review his portfolio. He's got Bandhan Small Cap, Nippon Small Cap, HDFC Mid Cap, Edelweiss Mid Cap, HDFC Flexi Cap, Parag Parikh Flexi Cap. Total SIP he says is 40,000. So congratulations, Prabhat. You at least started off. You've got a goal in mind. You've got time duration 15 years and 3 CR is a corpus. But what remains to be checked is definitely the investment amount. How much more, Anil, do you think he needs to invest in?
Yeah, so broadly his funds are okay. The only thing, he has overlapping funds. So my only point would be he can look to consolidate it. But in terms of his requirement that he has, he will almost need to invest almost like, I think, 17,000 rupees sort of a month. Okay, so and he needs to increase his corpus, and he can do this by maybe adding, say, ICICI large cap fund, and uh, doing a dynamic asset allocation fund, say like a HDFC Balance Advantage Fund, 10,000 and 7,000 rupees, to be able to help him achieve his goal.
All right, so Prabhat, that's the strategy for you. The funds are okay, slight changes recommended. Next question is from Mr. Satyendra Singh. He's 40 years old, investing for 15 years. He is planning to step it up by 10% per year. Target is 1.5 CR, and it's just a 1 month old investment that he has done. Parag Parikh Flexi Cap, 6,500 per month. ICICI Pru Large and Mid Cap, the same amount. Bandhan Small Cap, 3,000 rupees per month. HDFC Balance Advantage, 4,000. And he wants you to review his portfolio. So again, congratulations, Satyendra. You've taken the right route. And again, 15 years time horizon, but 1.5 CR, I think right now it really looks big. But Anil, he really needs to consider that amount. We are talking about 15 years. Inflation and counting everything, what do you think will be the actual value that he should be looking at accumulating?
Yeah, so on this basis, he can actually go higher, because 15 years is what he has, and he's making a reasonably, okay investment out there. So, and if, as long as he's able to sort of step it up, right, then after 15 years, he will be able to look at something like 1.73 crores or so. Okay, is the fund that value that one expects it to be. So, which is sort of in line with his requirement. But the important part is, to be able to do a 10% annual SIP step up. Okay. So if that doesn't happen, then he'll probably be a little short. So as long as he does that, I think he's fine.
All right, so good to go. That's a thumbs up for you. We'll take this last question, and this question is from Mr. Anirudh. And 1 CR in 10 years, he wants to know if his SIP is right, in the right funds. Quant Small Cap and SBI Energy, 5,000 each, 10,000 going on. But yeah, he really needs to get the first step right. I mean, if this is the first step, he's really landed in a very risky zone already, Anil.
Right. So I'm just saying that, just two funds, and one is a sectoral fund like energy. I mean, this is not the right portfolio to have. So it's ideal that, in fact, in previous case, it was perfect. Everything was there. You have a flexi cap, you have a mid cap, then you have a small cap. Okay, so that is the ideal way for him to look at. But so the basic thing is, his energy savings, energy fund of SBI. I think it makes sense for him to sort of take that out. And what he could do is possibly do a combination of, say, Parag Parikh flexi cap. The second is, say, HDFC mid cap opportunities, and even maybe an ICICI approved rich cap fund. If he wants to take a high level of risk, then we can settle for another, say, mid cap fund or something. But I think it's good to have a bit of a diversified, exposure.
All right. I think with that, it's time up on the show. Thank you so much, Anil, for participating and helping our viewers get the right strategy for their investments and financial goals. And before I sign off, I'm going to leave our viewers with our WhatsApp number and email ID where you can keep sending us your questions, and we will help you finalize a strategy for all your financial goals on The Money Show. Thank you so much for watching. Goodbye.